Aloha and welcome to Java. Thank you kindly for joining me. This is for Friday, 26th of April 2024. We are expecting inflation numbers prior to the market open, and right now, after getting the GDP kind of showing the state of our economy resembling this, basically heading into one of the worst choices possible is stagflation, giant dumpster fire. So let's go into it. Our MMRI favored risk indicator at the moment is 306.9. Yesterday it spiked to around 310, I believe 309, 310. We're in extreme territory for risk. We've got the fear greed indicator also had large movements, recovered back a bit, and we'll talk about why in just a moment. So yesterday we had basically the GDP number coming out weaker than expected. So that actually was a slight surprise to me. I thought there would be a larger amount of war spending in there. So perhaps that's why they're trying to rush this $95 billion package to get this over to them, because we need to boost our GDP. So with this, we'll be watching, of course, 10-year yield and the relative strength of the dollar. So both of those on the verge of technical analysis, they hit a breakout yesterday when all of this happened. So stock market dropped significantly, and the sentiment right now is it's boosted by what we call the Mag 7, Magnificent 7 stocks. Basically, we are getting those inflation numbers, and we'll be watching that. So current sentiment is best described as nervous bulls. They can run any time to get more strength to continue what is now a bear trend in the market. So, looking at stocks currently, they were down toward the end of the day. However, they had recovered quite a bit on Google and basically Meta and Amazon reporting some numbers there. So, we'll go into that in a moment. So still in the red at the moment, but this is older and from the recovery yesterday, but we are showing futures moving into the green. So as I said, giving the bulls a little bit of space here. However, I'm urging large amount of caution because we've been talking about the reversal. Could happen at any moment, and when it does, it will be quite rapid. So with our calendar and earnings today, as you can see, we're getting the PCE numbers, core PCE, and these are all prior to the market open. So looking at the 10-year yield, you can see right up here is basically showing the breakout that I was speaking about. The relative strength of the dollar has very similar chart. So they retraced, but if they recover and confirm from there, they could go higher. If they do, it will pressure the stock market in a serious way. So with this, just a slight note about foreign currency, the yen. Bank of Japan decided to hold their rates because they see higher 2024 inflation. So if they had done a surprise hike, it basically would have strengthened their currency and could have brought down the relative strength of the dollar a bit. But they decided to leave this because otherwise they will have to just be cutting their rates back down within the next cycle. So with this, as we were talking about, Alphabet is the parent company of Google. So their stock surged because they are offering a dividend now. They also did a large amount of stock buyback. So really bolstered the company, shot up the stock. Yet Meta also put out dividends, so that was very positive. And they were talking about, even though Meta is having some other issues right now, Amazon under pressure now as far as the dividends as well. So in a related story, we've got Amazon are to invest $11 billion in Indiana to build data centers. So large part of their business is under AWS, stands for Amazon Web Services, if you're not familiar with that. So basically, they've got a large amount of companies that are now doing cloud services, and they're building the data centers to host all of these processes, but also the data. So as we've been speaking about, the data has tremendous amount of value, and they're all of the top ones, as well as Microsoft, competing for that data to train their artificial intelligence. So theoretically, Amazon could be training their artificial intelligence with all of this business transactions and information, depending on what they sign as far as privacy. So, moving forward, I see this as the next battleground in that. With that, I'd like to move forward and talk about the real economy. So, we had Janet Yellen, US Treasury, saying the US could bring inflation down without hurting jobs. So, while this is possible, the chance is so minimal. It's not likely at all. We're talking extremely small chance that that could happen, and it's not what the economy is showing. So we've got business bankruptcies jumping. A slow wave of failure in businesses speeds up. So we're getting higher number of business bankruptcies. Commercial real estate is dumping. And we've also got more the target small and medium businesses going out of business. So I just put in one example. This is Foxtrot because it came out. It is coffee shop. And in the middle of the business day on Tuesday, the baristas had to kick out customers because they were closing all of their locations effective immediately. It was a shock to them. And we're going to see more of this happen. So basically, they had 33 locations across Chicago, Austin, Dallas, and DC. So they were a large enough company and they shuttered immediately. So all of those people now out of jobs, and it's this we're going to see a trend in this, I'm afraid. So just to be prepared for such things, if you work at a small to medium sized company, layoffs are spreading. So do be prepared for that in the event. So on lending and banks, we've got mortgage rates climbing, of course. So this is going to pressure the housing market. Along with this, we've got a repeat, in my mind, of what led up to 2008. Fannie Mae and Freddie Mac are basically government-based loans. So government-backed mortgage securities, again, they've increased 3.2% annual rate because banks are backing off on their lending. So this is more taxpayer debt that's going to happen. So with independent banks, we have Valley National saying that their commercial real estate portfolio, they are concentrating on dropping that as quickly as possible to below 400% of risk-based capital. So that's a tremendous amount in the portfolio. Watch them for weakness. So we also had, I'm going to skip over to Webster Financial. They're reporting an uptick in defaulted loans. And if you look at this graph, this bottom one is the first quarter of this year, 2024. So they reported a 53% year over year increase in credits that went into default. So moving forward with this, we're getting mixed stories still, and mainstream media spinning them as they like. Moving to Capital One. So they're saying the first quarter profit jumped on interest income boost because with the rates going up, they're making higher interest on the payments that they're getting. However, the truth behind this is their profit overall missed estimates as loan write-offs climb. So they were making more in the interest, but the whole principal ended up getting defaulted on and will get written off. So their net on the bottom line is they lost money because everybody walked away from this unsecured credit. So moving into wars and trade wars so that we don't pay attention to what's really going on in the economy, we'll give you something else to look at. So we've got China warning Anthony Blinken that the United States must choose between either cooperation or confrontation. So kind of developing this war basically over in the Asian side that we've got. So along with this, in the currency wars and also monetarily, United States signed a bill Wednesday to allow the confiscation of funds of Russian assets. So anything on US soil, they're saying now is open to confiscation, which is a very terrible reputation. And I think multiple countries basically are going to get out of the dollar, and this is what they're talking about, the acceleration of such. So basically, United States proving they cannot be trusted. So with this back to the real war front of the guns and barrels, we've got Spain is sending Patriot missiles to Ukraine. This is because the European Union and NATO pressured them that they need to put in their part for the war. So moving on to something else under the updates, I would like to thank Billy for this. And I think it's something that I would like to move forward is to end with some innovation and positive things going on, because there's quite a bit actually. So we've got a US startup fusion energy device. It's a smaller company at the time, but what they've done is they've run into a low-cost, compact device that can reach fusion energy temperatures. So this low-cost portable energy company is called Fuse. Quite fascinating, and if this could spread, could have the capability of lowering the dependency on coal and other fossil fuels. But the point of this is to get back to an energy independent nation as we once were. So, with this, I would like to wish you all a wonderful day. And thank you all kindly again for being here. It's all of you that make this. I really enjoyed the Discord the other day. My apologies, I had to go. And I thank you all for being there. So, with that, until I see you again, my friends, stay free.